Hey everybody, Rob Maurer here, and today we've got news on Tesla's production status in China. We've also got an update from Morgan Stanley after their visit with Tesla's investor relations team. We got the update from the Fed on their March meeting, possibly some new information on that new Model Y that we had seen from the EPA, and a few other things as well. Alright, so as we have been expecting, volatile day in the markets today with that FOMC announcement. The NASDAQ ended up finishing up 3.8%, Tesla up 4.8% to $840.23. The whole market kind of ebbing and flowing around the Fed announcements. First, the release of the meeting minutes, and then Fed Chairman Jerome Powell's statement and Q&A. We could obviously spend the whole entire episode talking about those things, but we'll just hit the highlights here. So, as expected, the Fed did raise the federal funds rate by 25 basis points. Remember, there was a little bit of expectation that maybe that would be 50 basis points earlier, but that had kind of been quashed before now. So nothing really unexpected with that action. And then what's most important probably from this is the expectations for the rest of the year. And the FOMC does share the committee members' expectations for where interest rates are going to end the year at. And as you can see, there's a bit of a spread between committee members, but they average out to be between 1.75 and 2.0% versus the 0.25 to 0.50% that we're at now. So that implies 6 more increases this year if they do happen, 25 basis points at a time. Now, obviously that can and will change, and that's something that we'll continue to watch, but that's the very high level summary of today. And then I think Powell said some things that were interpreted bullishly by the market. Plus, I think just getting through an event like this tends to remove uncertainty, which we've talked about. And ultimately that uncertainty can have as big or even a bigger impact than what the actual changes end up being. Now into Tesla news, you wouldn't know it by the stock, but we do have negative news out of China. As we had talked about yesterday, there were rising COVID concerns causing production facility shutdowns in other areas outside of Shanghai in China. So there's risk of similar action in Shanghai, and we're already seeing that today. So Reuters this morning reporting that Tesla is suspending production at Giga Shanghai for 2 days. They say that Tesla staff and suppliers were told today in a notice that was reviewed by Reuters that production would be suspended today and tomorrow. Separately, Wuwa, who does drone flyover videos there at Giga Shanghai, had shared out that the entire region of Shanghai was implementing a 48-hour fully enclosed nucleic acid testing policy, which would make shift changeover very difficult or impossible. So that's very likely the reason that we're seeing the shutdown here from Tesla. Now, if this is only 2 days, then if we look at the production numbers that we had talked about last week, that probably ends up reducing total production for the month by 4,500 to 5,000 vehicles or so. We'll just have to keep that in mind for both March production numbers as well as the total quarter. Now, of course, the bigger risk, which we'll continue to keep an eye on, is what happens if Tesla can't restart production later this week. So far, there would have been 15 days in March. If those were about 2,300 per day, that's about 35,000 vehicles they could have produced so far, just ballpark. If production doesn't restart, there'd probably be a little bit more than 35,000 that they were not able to produce. And if you think back to some of the numbers we walked through for Q1 as a total, that would put production at risk of dropping a little bit below 300,000 for Q1, which would be down sequentially. Now, obviously, there'd be a very good reason for that, but that is the risk that we'll continue to watch. And then the other thing to consider is that if Tesla is having a shutdown, it's likely that Tesla's suppliers are also having a shutdown in some cases as well. Hopefully just a short-term thing. All right, next up today, we've got a new note from Adam Jonas of Morgan Stanley. They have met with Tesla's investor relations team while touring Tesla's Fremont factory on Tuesday this week. And from that, they have highlighted 5 key takeaways. So we'll take a look at those 5 and some of the details they include behind those main points. All right, so first main point, they say that the Tesla Fremont plant is bustling, to say the least. Nothing really too new in there. They kind of just talking about how originally when Toyota had this space, it was designed for about 300,000 vehicles per year. Tesla now obviously above 450,000 per year from Fremont. So they're just noting how kind of jam-packed everything is there. But they do also note that there is a quote-unquote exciting buzz with the 10,000 support personnel in the office building within Fremont. Nice little emphasis on Tesla's co-location of quote-unquote office workers with the production facilities. Anyway, the second takeaway here, probably more interesting, they say that Tesla is demonstrating strong pricing power. It's a good continuation of our conversation from yesterday. Jonas writes that, quote, Tesla is raising prices from a position of strength and is still not seeing wait times go down, which range from 2 to 3 months wait to 6+ months wait, depending on the model. If one purchases a more expensive trim model with FSD, Tesla is beginning to prioritize these shipments with earlier delivery. Tesla believes that supply/demand dynamic will persist for the next 18 months at least, end quote. Jonas continues to say that we had underappreciated the pricing power and lead Tesla has, and expect that Tesla won't need to cut price until 2024/25 to maintain its market share, and by then, software can contribute more to the profit and loss. The third takeaway here, very much related, says that raw material impacts is felt but not at the rate of pricing increases. Raws aren't keeping Tesla up at night right now. Chips are actually a bigger concern in real time. Now, their details here are sort of a mix of what they have heard from Tesla and then also their own interpretations, so it's kind of hard to parse those out, but they write that, quote, Tesla has long-term contracts in place, does not specify exact percent, and is already feeling commodity pressures, which was in the Q4 result, and should not come as a sudden impact to margins, our view. Pausing with the quote there because this is exactly what we were talking about yesterday. Continues, quote, in addition, as we start to lap periods of higher prices from September last year and only recently this week after layering in further price increases, this will more than positively offset any headwinds in later quarters. Tesla is not worried on nickel given their reliance on LFP for 50% of models today for standard range, which doesn't need nickel or cobalt, and going forward LFP could move to 60 to 70% of units if needed if nickel became uneconomic. Near term, the key factor that Tesla stressed is chip supply, end quote. So I think all of this is very supportive of the thesis that we had walked through yesterday. Again, it's kind of a mix of their thoughts and Tesla's, but I think they have confidence in what they're saying there because of things that Tesla had said. That matches with what Tesla had said on the Q4 call, but it's good to have a more recent update on some of those things. The fourth point was on capacity and margins. They say that Tesla reiterated its guide to be comfortably above 50% volume growth with or without Berlin and Austin. They then talk about some of the improvements that Tesla has made with various new factories. We've talked about those things, so we won't go through that. But they also note that, quote, Tesla IR also mentioned that it believes the industry is grossly undersupplied across capacity and all other adjacent bill of materials in 2025 if we believe OEM projections, end quote. Now, I know a lot of us feel that way. It's interesting to see Tesla share that same thought. And like we've been talking about, this is going to be one of the very interesting things to see play out over the next couple of years. Most automakers have done a lot of talking up to this point, and we're now about to see if any of them can actually deliver. The fifth and final takeaway from Morgan Stanley then was on the impact of full self-driving. We've talked a lot about that. I think we're all well aware of the deferred revenue that Tesla's got for FSD. Jonas notes that once Tesla does a wide release of City Streets FSD beta, that, quote, instead of 60% of FSD revenue recognized immediately with 40% deferred, Tesla will be allowed to recognize all of it up front, end quote. Personally, I'm not reading too much into those numbers. I'm not sure if IR would have given that specifically, but I don't believe that to be entirely accurate. It's very close, but Tesla actually has to defer some of that revenue because this is a feature that they need to continue to service over time. Even Apple, for example, will defer some iPhone revenue over time for software support reasons. So yes, it'll be very close to 100%, but not 100% completely. And that makes me question that 60% figure, though I do believe it's somewhere around 50 or 60% right now. Anyway, not terribly important, but wanted to share my thoughts on that. Adam Jonas did have a second note that came out today. We won't spend much time on that. There's really only one thing in here that I want to point out, but the title of the note was Time to be Realistic on Autonomous Cars. They note that they're bullish on autonomous vehicles, just not so fast. And one of the biggest differentiating factors here, they say, is, quote, capital and willingness to stay in the game. In our opinion, perhaps the single biggest factor in determining who will emerge as dominant in the AV business is a willingness and ability to commit many billions of dollars of capital at the project with minimal/no revenue generation for many years throughout multiple economic cycles, end quote. This is why Tesla's strategy here is so beautiful. They don't have to do that because customers are literally paying them to progress through this so-called game. That's extremely advantageous for Tesla. All right, next up, we've got another note. This is from Global Equities Research, Trip Chowdhury. I don't put much stock in these, but he does his channel checks at Fremont, says that delivery activity in the quarter is, quote unquote, monstrous. From the number of reports like this that we have seen from Global Equities Research and the lack of data that I've seen accompanying it, that's why I don't put much weight in it. So just wanted to say that in case other people had seen that headline. All right, next up, we've got a couple more updates from Green the Only as he continues to look into Tesla's latest software updates. He says that further analyzing 2022.8.2, the Texas-made 2022 Q1 dated Model Y SR Plus is added to that software, so he guesses that that would be the first car configuration out of Giga Texas pretty soon. All right, so very interesting. As we had talked about before, my perception based on the efficiency numbers that we were seeing is that this probably wasn't the 4680 structural battery, front rear castings. Maybe there's just something with the EPA test there that's obscuring that a little bit. Don't want to base too strong an opinion off that one data point, and this does make me question that a little bit, but we'll see. Green does also point out a couple of other things he's seeing in the software. He says that there is now going to be a different rear screen option for the S and the X refresh, possibly just different assemblies and different touchscreen controllers. So not an option that would be selectable is my interpretation, but just a change of parts. Also a new part vendor for the Model 3 liftgate. And then he also says that the interior cabin radar finally starts to get signs of life for the refreshed S and X. We're not sure exactly what this is going to do, but Tesla's patent suggests that it may be for detecting people in the vehicle that maybe the camera can't see. Perhaps a child, maybe a pet. We'll see what Tesla does with that. And then the last thing here, pretty interesting, he says that the trip energy accounting now takes into account cross/headwinds, air density, and humidity when available but notes that that is possibly China only for now. I'm glad to see Tesla continuing to work on that. I actually do think it does a pretty good job right now, but any improvements on that, always welcome. All right, next up, we've got some more comments regarding Tesla from Volkswagen CEO Herbert Diess. He's been in Austin for South by Southwest and recapped his trip on LinkedIn. Part of that recap mentioned Tesla. He says that, quote, "By the way, Elon's new factory," he calls it the machine that produces the machine, "is impressive. 1.2 kilometers long, 400 meters wide, all under one roof, no logistics from cell production to the final assembly. Once up and running, it will very likely set some new benchmarks. I'm so happy that we decided a new plant for Wolfsburg. Without that, no chance to compete," end quote. Well, that's one plant. That's for 2026. Tesla's already got Texas, Berlin going. We know they're expanding Shanghai. So Volkswagen's got no chance to compete except for that one factory, and Tesla's got that factory outmatched by a factor of 3 to 1 and 2 to 3 years. Well, that does not seem great. I guess we'll use the more generous interpretation of Wolfsburg allows them to stay competitive and then eventually catch up, I guess could be the train of thought there. But that's a very telling statement from Diess, who has been very open about this the entire time. Next, we've had some reporting on the Apple Car project over the last couple of days. This is because a relatively prominent Apple analyst has noted on Twitter that, quote, "The Apple Car project team has been dissolved for some time. The reorganization within the next 3 to 6 months is necessary to achieve the goal of mass production by 2025, end quote. Well, I remain steadfast in my opinion that I've had for a long time that is not going to happen. Certainly no chance for 2025, in my opinion, at this point, and I still believe that it's unlikely to ever happen. All right, last couple of things here. First, just an update from Elon on Twitter. There was a tweet that he replied to about when humans would end up being on Mars. Noted 1969 for the moon, and then said, "What's your best guess for Mars?" Elon replied to that, saying 2029. Lastly, then a couple of updates on The Boring Company. San Antonio Express News is reporting that the Alamo Regional Mobile Authority could decide as soon as today whether to select The Boring Company or a competing bid for a project to connect the airport to downtown. We also have a report from the Dallas Business Journal that The Boring Company has had discussions with the North Central Texas Council of Governments to express interest in possible projects in the Dallas-Fort Worth area. So a lot going on there in Texas with The Boring Company, and should be some exciting projects to follow over the next few years. That will do it for today, though. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. Also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Thursday, March 17th episode of Tesla Daily. Thank you.